Welcome to ShortView Trading, it's your morning market hit for Monday, 28th September. What matters today and this week for traders? Well, the base building theme continued to play out on Friday. Indeed, in the London morning session, we saw S&P futures, Nasdaq futures move back towards those intraday lows that they'd touched a couple of times over the course of last week. For the S&P 500, E-mini futures, you can see on the chart in front of you now, that's around the sort of 3,200 level. The level we reached on Thursday and on Monday last week, that sort of broad level. So the base building picture is increasingly convincing for the S&P 500. And indeed, the chart pattern looks even better if you look at the Nasdaq 100. On Friday, it was weak in London, in the London morning session, but it didn't quite get back to those intraday lows. Again, the pattern, as you can see now, looks like a convincing bit of base building. So increasingly, US equities look like they're finding a floor, at least in the near term. Critically now, of course, the S&P futures are back at their intraday highs from last week. So, we're back at the top end of that range. It's likely you'll get a pause, given so much strength in that index over on Friday's US session and, of course, overnight in Asia. But having said that, we think beyond that, this looks good. This looks, as I say, an increasingly like a base building pattern, increasingly convincing in the near term that we can get some strength in these markets. And that expectation is supported by what you see from our short-term market timing models. Indeed, the risk appetite scoring system, a measure of fear and greed in markets on a 1 to 2 basis, which is at the heart of many of our short-term trades, is back on strong buy last week and has been nicely following the market movements on that 1 to 2 week type time frame. So that model's on side. Other short-term models are on side that we're publishing in today's daily rag. Over and above that, we see that credit markets throughout this sell-off have behaved reasonably well. Of course, they've had some weakness. There's been some widening of spreads, but they're behaving pretty well considering the sharp pullback we've had in the S&P and the Nasdaq over the course of the first few weeks in September. On top of that, of course, market participants are worried about the lack of stimulus, the lack of progress in the next stimulus plan in the States. They're worried about the election that's upcoming and whether or not it'll be declared illegal and whether or not there'll be some shenanigans and wranglings over the actual result. But, what the market knows and what the market discusses and fears is generally in the price. And that's why we use the market timing models that we use, because they tell you when markets have become fearful and they tell you when they become greedy. And of course, in the thinking of Buffett, on a longer term, you want to be greedy when markets are fearful and fearful when they're greedy. So models suggest they're pretty fearful at the moment. Increasingly, that's the case on short term, but also medium term models. And therefore, of course, we're inclined to start leaning the other way. For full detail on how we're playing this market, please see today's daily rag available to subscribers via the website. So what are we watching today? Well, today the macro is fairly light. This week's a big week, though. Of course, we start getting into October by the end of this month. But initially, the first presidential debate in the States, I think, will be watched very closely for how it influences the polls and therefore potentially the market. That's up on Tuesday, overnight London time, obviously evening time in the States. Other than that, of course, on Friday, we've got nonfarm payrolls out of the States. And on Thursday, we've got ISM manufacturing. So lots going on this week, lots of key stuff, a lot of Fed speakers out as well. Plenty to focus on, plenty to keep the market's attention. So that's it from us. That's your morning market hit for Monday, 28th of September. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Trade well.